Hi guys, Dino here from NPIS. It's been a while catching up on everything because I've been studying this NRAS system for a while now, and when it first came out I had to look at the areas that the properties were located. Wasn't too happy with it, but now that a lot of good developers are taking this on board because of the success it has had, so what I'm going to do, I'm just going to show you very quickly the difference between a normal investment property and also an NRAS property. Okay, so what I've based this example on is on a $360,000 investment with the land value of around 200 or 150, sorry. So if we have a look at this, have a look at that, it's $360,000 for the property, and I've done the stamp duty check already. It's on $150,000 land, it's going to cost you around $3,923. We're not going to put a cash deposit down. If you are going to do, you just put that in there. Obviously be a lot cheaper for you to run. So total balance is $363,923. Loan costs about $2,500 depending on your lender who you're going to borrow from, but let's say $2,500. If you're going to pay mortgage insurance, you'd put it in there, but in this case we're not going to be paying any mortgage insurance. Conveyancing, roughly around $1,500. So the total amount that we're going to need for this property is we're going to borrow is $367,923. I've put an interest rate of 7%, which means the interest yearly we're going to pay is $25,755. Alright, there's going to be outgoings, body corporate, no body corporate, because it's a house and land package. Rates are for $1,200. I've put $500 for insurances. I've put $400 for rent cover plus, $500 for maintenance, which there shouldn't be because it's a brand new property, but let's say there is. 8% on the property manager. The property manager's cost is being calculated by the rental here. So I've put in on the $360,000 property, we're going to get about $340 a week, which means $17,680 per year. Total running costs, we just calculated from here, we just $29,000, and the property manager has been determined by the rental income there, which is $1,414, which means it's going to cost us about $572 a week to run this property. So that's our $20,769 is our total running costs, minus the rent, which is $17,000. Our money shortfall is going to be about $12,089. Now the depreciation section, we're going to depreciate the loan cost of $500, so we divide that by 5 basically. You can depreciate it for 5 years. This year's internal depreciation, we're going to claim $1,000 is for travelling. I put $220,000 for the cost of the building, so we'll be able to claim $5,500 on the building this year or for the next 40 years. So the total running cost of this property is, the shortfall is $12,089, but with all these claims that we're going to claim against the property, it makes it that we can claim $23,089 for the total claim of this investment. So if we have a look here, let's say we're on an $80,000 income, you would be paying around $17,850 a year in tax. But we're going to claim $23,000 against this investment, which means the new taxable income is going to be $56,911. Now the tax you'll only be paying is $10,923, which means you'll save in tax $600,927, or if you put in a 2036 form or the tax variation form, you'll get back $133 weekly back in your pay packet. Just remember, this is not for you, this is for the investment. So if you have a look at the summary, $572 is our total cost per week to run the property. We've got rental income of $340 that we set up top, and our tax we're going to get back is $133. So at the end of the day, it's going to cost you $99 to hold this investment property, which is still good. Now, I'm going to show you the difference between, that's a normal investment. I'm going to show you what a normal investment and an NRAS property will cost you. Okay, now there's a couple of differences with an NRAS. Number one, the rent. We have to reduce it by 20 to 25%. So we put $340 up there, what we said we're going to get. Now the new rental is going to be $272. So we put $272 there. Right? And the other difference is the property manager. Because it's got to be managed by a proper NRAS property manager, they charge 10% for property management, which is okay. I think it's 141 before, something like that. It's only paying extra $300, which we can claim a lot of that anyway. So anyway, that's done all this calculation. If we have a look at here at the summary of the property, the grant the government will grant us, the federal actually, it's actually made up of two areas. The federal government gives us $6,504 a year, and the state government, the state you're in, will give $2,168, which adds to $8,672. On a weekly basis, you're basically in 166.77 cents for reducing your rent from up here from $340 down to $272, which is about $70 for. So by reducing it by $70, you're getting an extra $166. Pretty fair for me. I can handle that. So let's say, so that's our grant, 166. The rental is 14, which makes that to what, 272. We're going to get a tax refund of 153. So the total, what we're going to get from your rent, government grants, and the tax refund, you're going to get back $30,800 back on this investment if you go through NRAS. The money shortfall we had was $29,769. So what does it mean? It means you're positive geared $1,000, which you make $20 roughly per week. Now you have to check with your accountant, but guys, look what it is here. Before it was costing us $99 to hold an investment property, but through NRAS, which is a government thing, I haven't made it up or anybody like that. The government is offering this. Okay. Now, why has the government done this? Well, there's two reasons. Number one, there's not enough housing. If the government wants to give more public housing and all that, it costs them about $200,000 to $300,000 to $400,000 to build a house, right? This way, they only give $8,000 over the next 10 years. $8,600. Remember, this grant here, $8,672, is indexed to inflation. You're getting all the benefits of an investment property. Quality builders are now building them. You've got good tenants because they have to qualify. There's an income, and I'll have that on this webpage, that all any tenants that wants to qualify for NRAS scheme or NRAS property, they have to earn so much money. I think it's like $60,000-$80,000 a year. But anyway, check that on this webpage. And what I'll also do, I'll have two PDF files. What you can do, you can print out these 2 pages out. One's going to be a normal property, and one's going to be NRAS property. And you sit down and just go through it. Now, I've got the specialist up here in Queensland working with him, and he knows all the areas and who's actually given. You can't get these properties everywhere. You do have to qualify for these properties. Okay, if you want to take this great opportunity, I mean, this is a great way to buy 2-3 properties, and it's not costing you much. Now, remember, as you do buy your properties, it will be different because your taxable income. Just for an example, on this one. If you're on 80,000, your new taxable income will be 53. So on your second one, if we go 53,375, means your new taxable income will be 26,750, right? Which means it's going to cost you $3.90, right? If we take it for the third one, 26,750, now it's going to cost you $73, right? So if we work 73. Plus, it's going to cost you that's 80. Let's say $80, and before you will profit $20. So, in total, you can buy 3 investment properties for around $60. Now, this also will tell you if you're on an income of $26,750, that's how much it's going to cost you, $73. Never before. Let me just go there. Let me just put this back. What if it's we'll increase that 53,370. So if you're on an income around $50,000, that's what it's going to cost you. $3.90 per week, $200 a year, and you've got yourself a $360,000 investment. Guys, this opportunity is too good. Don't let it pass. It's great. Please let me know. I'll put you onto the property specialist, and myself, and we'll talk to you and we'll explain to you. There's a lot more to it than meets the eye, obviously, but just register yourself and we'll get back to you as soon as we can. I wish you all the best. Take care. Bye bye. Is he still out?